Welcome to Insights. I'm Eric. I want to do a review on the corn market today. We might as well do a review on the grain market since all grains are acting the same with the flood of liquidity coming into these markets. They're showing almost all the same characteristics. I want to keep this as an open review so we can throw it out there to the community. There's nothing really new to add to the subscribers, so I think it's an ideal review to have for open content. First thing we do is define in the evolution of the trade where the primary trends. Primary trend is here. This is the price and time cycles, and they're both below zero, so there's no problem within the primary trend. It's still early. In the quick primary trend box, we can see it's been up for three months and 18%. And the evolution of the trade rides the primary trend. I think we're going to take the primary trend to its completion, which could last, in terms of corn, it can be anywhere from 12 months to 2 years. So don't underestimate the amount of time that we're going to be in this position. The only thing that you might do along riding the primary trend is to fool with it based on whether or not it reacts either in the daily trend and weekly trend enough to create resets, but there is no reset. The current phase is defined here. There's no lettering over here, so it's empty, and that means the A&E phase. So we're looking for alignment and changes in energy. The alignment is still good, it's still up. So energy is what we can look at, and that'll be updated tomorrow. We have a negative energy build, and we're going to take a look at that in a minute. Enough to slow the entire, create a blocking dome across the entire grain complex, but it's just not enough. The speculation is still too powerful, so it's powering everything through to the upside. And we're going to take a quick look at that energy build. This is the corn, beans, and wheat energy builds. It's in a composite, so this is the composite grains DI. And what we can see is all the three grains complex, they're pushing higher. It's creating these red domes or red blocking domes because the energy builds are turning negative. DI is below minus 60, and DI2, which is kind of like a smooth version of this in order to see how big and how long the DI is below minus 60 or gives you strength of a move. It's fallen too. Now it could fall a lot further, and what we could do is we could create several blocking domes and price powers through it. But eventually speculation kind of exhausts itself and we run out of energy. And this is where we come down to studying the daily and say, well, how far can speculation go? Well, relative to the daily trend that's been in place, we can see that the daily cycles is 5 standard deviations above the typical daily rally. But when you have lots of speculation in a commodity market, any type of market that's extremely volatile, you can get readings 3, 5, even 10 in terms of price. What's the more stable reading is in terms of time. Now, time at 22 days is not even red. It's above zero, so it's above its average cycle. But this will go high as well. This will go 1, 2, 3, but usually won't get much past 3 or 4 standard deviations. And then when time expires, the move will end, and it really won't matter what the daily price cycle is. When time gets too stretched, this will end. So profit taking in terms of in a backdrop of mass speculation has more to do with following the cycle of time. So if you're a subscriber and a trader of corn or a producer of corn, well, you know, the most important thing you're focusing on here is the monthly trends. When you download your version of the matrix, just make sure that this primary trend always says up, and it's going to be notified in this box here by this BUT. BU means bull, BR means bear, and T means time. So as long as there's a number here and it's relatively low, you're doing fine owning corn or producing corn. I mean, you want to get that crop harvested and sold before we get into a primary trend downturn. But if you're a trader or a hedger of your position, you can use the daily and weekly time frames to study when the move gets too far or moves too far too fast. This is pretty fast. 5 standard deviation price cycle means the price move is pretty aggressive, but it's not too fast in terms of time yet. So there could be more to the upside. I know that's probably going to shock some people. I've seen this development take place in Bitcoin Corn could be the next Bitcoin, even though nobody's following it. I mean, Bitcoin has a much greater following, but I think corn is far more professional. It's a market that's a little deeper than the Bitcoin market. Maybe not. I mean, there's a lot of professional traders trading Bitcoin as well, but I do think it's a different type. A market that has production within it has different type of people involved. So these numbers and this set of numbers can go higher. Again, focus on time mostly, and really how far this goes and how far it pulls up the weekly. This could really go and push up the weekly a lot too. If the weekly gets 1 or 2 standard deviations, that's more of a problem than the daily in itself. So right now, there's nothing really disturbing about the corn market other than the fact that there's no real entry. The play for traders, the play for position investors that are looking to build into their core position, we're waiting for a reset, which would be an R here. That would have the daily trend go from up, and then it curls back down, and then it comes back up and drops all 3 of these things into up alignment again. So in order to have a realignment of an uptrend, you have to have something go into a downtrend. So that's going to take time. I mean, I would assume that as this gets more extended, the chances of this falling into a downtrend, they go up in probabilities. That's what these cycles are about. The computer defines a normal cycle, but then it also tells us when the cycle is being pushed beyond to an extreme. That's what the whole point of normalized distributions are. That's what the 2, 3, 4, 5 standard deviations. It's basic normal distribution statistics. It's something that if you have any more questions about, you can contact me directly. Or I mean, it's rather than have a statistical class here on one of these videos, you can read about it, or we can talk about it in private as well. So that's the setup for corn and essentially the grains market. The grains market is everything's moving together. They all tend to do that almost even at any other time, but now they're really flying. Don't underestimate how far this can go up when it really starts to squeeze and this time cycle starts to move higher or gets to be a real problem. I will update this for subscribers. So thanks for watching this video. If you have any comments or questions, please send them to me at the blog or put them anywhere on social media or underneath the comment section of this video. If you haven't subscribed to the YouTube channel or you haven't subscribed to the blog or follow the blog, please do so. There's many ways to do it through both email and all the social media outlets, as well as RSSI feeds. Anything still works. This blog has been going long before Twitter was around and long before Facebook became popular. So there's a lot of ways to keep track. The whole point of this stuff is not to fall off the grid. This stuff is going to move. The grain market, a lot of the agricultural prices are going to move. It's not going to move in a straight line. It'll get confusing. My guess is you'll need some help. So thanks for watching today's review and have a good one.